Friends, welcome. In this video, I'm going to discuss about option buying strategies. What are the option buying strategies which we are offering at Algorithmic? And what are the strategy, what are the fundamental philosophy and the strategy which we are using behind the strategy? That's what I am going to discuss in this video. Let us start the presentation. Friends, first of all, what we need to understand is option buying actually when it comes to trading, it carries higher risk. Even though in theoretically we have learned that option buyers have a limited risk of the premium what they pay, but the probability of winning is very less. Right. So first thing what we need to understand is, see, when we say option buying strategy, most of the people will be thinking in such a way that we need to invest only less capital and we can get a better return, right? That is of course right. But at the same time, always understand that the probability of winnings are very less. So with that less probability, we need to actually have a higher edge. Going forward, we will understand in detail. So let us see what actually what are the strategies which we are offering at Algover and how does it work. Now, in this presentation, we will be talking about market studies. What are the market studies which we have applied inside the strategies? And the edge, what is the edge? See, basically, there are two parts in a trading. One, the probability. Let us say if you have a strategy which gives you 70%, 75% probability, then even with a lesser edge, you will be able to actually succeed in the market. But when it comes to lesser probability, you should have more edge, right? So what is the exact edge, the extra edge what we are getting in this strategy, right? See, when it comes to trading, most of the traders come into the market with a gambling mindset, right? In a casino, normally the gambler never wins. Only the casino owner makes money in casino, because the board is designed in such a way that the casino owner has an extra edge, right? So similarly, when it comes to trading, you should have the mindset of that owner where whenever you take a trade, you should get an extra edge, right? So going forward, you will understand in detail. And what is the real psychology you need to have when you comes to invest in these strategies, right? That's a very important part. Then what are the strategies which we are offering, right? So before going in detail, I want to give you a disclaimer. I'm not a SEBI registered advisor or financial advisors. I am just giving you this for an educational purpose and just for an awareness. And none of the strategies or the concept of what I am talking is not going to guarantee you any success or profits. There is no return guaranteed. Always understand that there is a market risk involved, right? So I want to give you a disclaimer. Now let us start. So I told you about market studies, right? So according to us, there are four types of market. One is an uptrend, when it makes new high. Then we have a downtrend. Then we have a sideways day. Then we have a high volatile day. So according to the studies, what it says, market almost 60% of the time market remains sideways, right? So this 60% of the time market will be in the sideways, and less than 10%, maybe a 5 to 6% of time, market will be in a high volatile day. So balance 30-35% of the time, market will be in either uptrend or downtrend. Right? So trending market will be 30 to 35%, around 5 to 6% kind of thing will be high volatile. Around 60% of the time, market will be in sideways. Right? So this is a small analysis done by other experts. So with this concept, we need to understand that. So to become successful in option buyer, see, option buyer will be able to make money only during the trending market, right? So they have that only the 30-35% of the time they can make money, and balance 60-65% of the time, there is a high probability of losing money due to the sideways or high volatile, right? So always keep that in mind. So there are four types of market trend. That's what we identified. There, I already told you that the buyer of the option has a lesser probability of winning. Right? Why did I say that? See, for example, let us find out the probability. Now, let us say I am bearish in the market and you are also bearish in the market. Now we have two actions we can take, right? Either we can go and buy a put option, or we can go and sell a call option. For example, I am going and buying a put option by paying some premium. You are going and selling a call option. Now, let us see the probabilities of winning. If market goes up, I will lose the premium what I paid. You will lose the up to the stop loss what you can, right? Because both you will be losing in the market. And if market remains sideways, what happened? I will lose my money because the option has two value. One is called intrinsic value, another one is called time value. So theta decay, the time value decay will happen. Because of that, the price, the premium will come down. So as a buyer of the option, I will lose money during sideways market, but as a seller of the option, you will actually gain money, right? So seller has a winning probability here. Then case 3, market comes down. Then both of us will make money, right? So according to this, the buyer has only 33% of probability and seller has 67% of probability, right? So first understand that. So we are actually going to play a game which has a lesser probability. So with lesser chance of winning, now we need to make money, right? So then we need to apply a different technique. That's what I'm actually going to discuss also, right? Now, so this is market study number 2. Then market study number 3. For a successful trading, there are 3 important parts. One is called psychology. Having the right winning mindset and understanding that it is a probability game. Trading is a probability game, not a certainty game. And emotional stability. You should have the right emotional stability because market is run by fear and greed. So we should have the right emotional stabilities. Then positive thinking. So these are the important part of psychology. So psychology plays a critical role, right? That's the most important part in a successful trading. So if according to me, I give 60% of weightage to psychology part. So if you have the right psychology, then the most of the part is taken care. Then comes to the money management. How much capital we need to allocate for each trading? What are the cost of operation? See, we need to understand cost of operation. Cost of operation is not only the brokerage or the statutory cost, even the stop loss what you're keeping, that should be considered as a cost of operation. For any business, we have a cost of operation, right? Let us say if I want to run a restaurant, I have cost of operation, right? See, if I wanted to, let us say, I want to do a turnover of a 1 lakh in a day, I may be buying a 25,000 to 30,000 worth of resources like the vegetables or the other items, and that I will actually convert into food and serve it at my restaurant, right? So, but I will not look for I will not invest a 1 lakh and try to get a 1 lakh, right? So what I normally do, I take a risk of the 25,000 to 30,000 by buying the groceries and vegetables, and I will try to make a turnover of 1 lakh, right? So similar way, we need to have a cost of operation. That's called our cost of doing business or whatever. That's our stop loss. Then risk to reward ratio. That's one of the most important part in a money management. The right position sizing. All this comes under money management, which has 20% weightage. Then comes to the strategies. Strategy comes your analysis, high probability creating the high probability strategies, having the right data analysis, back testing it, doing optimization wherever you require. All this comes under strategies, and that has a 20% weightage. And trust me, most of the people will only look at the strategies, right? So strategy alone, right? See, if you ask somebody like, have you done any course on stock market? They always say yes, and that would have been on something related to technical analysis, right? So technical analysis will not make you a successful trader. See, technical analysis is just one part of the game. It is not whole part of the game. We need analysis part, but that is not the whole part of the game. It is just one part of the game, right? So creating a strategy is important, but which has a 20% weightage, right? So these are the 3 important part to become a successful trader. So if we have all the things at the right place, then we can actually create winning trades consistently, right? So this is a very important part to become a successful trader. So when we give it to algo trading, when we give it to a system, what happens? Strategy is already programmed, money management is already programmed, and most of the psychological part also taken care. But we need to have the slight awareness where I am going to tell you what are the awareness you should have when you take these kind of strategies, right? Now I'm going to show you. So we already understood that we need to have we have only less probability of winning, but if you work with a different model, we have a higher probability of making money from the strategy, the option buying strategies, right? So here I'm going to show you a calculation how we can work with this work that extra edge, how we can get an extra edge, right? So let me open an Excel. This is yeah. So in this, let us say I'm just so for example, let us say we are starting with a capital of 50,000 rupees, right? With 50,000 rupees, and let us say we created some strategies, we created some analysis part, and when all the conditions are met, let us say we are going to buy a Nifty option, right? Nifty option, and Nifty option, when we buy, we take maximum, let us say we take how let us say we take maximum of 15 rupees stop loss, right? So here we take maximum of 15 rupees stop loss, and what we need a target is around 45 rupees, right? That means we are going to take a 750 rupees as our risk, right? And reward, what we are looking is, so here I'll write once again. So the risk, what we are going to take is 750 rupees, and the reward, what we are going to take is 2,250 rupees, right? And we have a cost of operation, cost of doing the business, I mean operation, which is basically I'm talking about the brokerage, statutory cost, all put together. Let us say it may be something which is like some 60 rupees if we are doing through brokers, like discount brokers, right? Now, so what is the total risk we are going to take in this? 810 rupees is our risk. 810 is our risk, and I just want to make it's a risk, right? And when it comes to reward, we will be getting only 2,190, right? This is how the risk to reward ratio will work, right? Now let us understand how many total trading days we have. We have total trading days of what? 20 trading days on average in a month, right? All we know that it's a 20 trading days. Now here, how many number of trades maximum we will do? Let us keep it as we will maximum max trades per day, we will keep it 3 trades. That means total monthly trades will be around, let us say 60, right? So we will be trying maximum of 3 trades in a day, and maximum, so that means the total number of trades in a month cannot exceed more than 60, right? It can only come down, it cannot exceed more than 60, right? This is what the basic rules which we set. Now let us see the probability, right? Now let us say probability of 1, right? Okay, I will just put 1, then 2, 3. Okay, these are probabilities, right? Now let us say if we are losing, like losing trade and winning trades, that means I want to show you at least 10 probability in this, right? Okay, now 3, this is 4, this is 5, this is 6, this is 7, this is 8, this is 9, and this is 10, right? We don't want the last one, right? So we have 10 probabilities which we are going to do it, right? Now let us talk about strike rate percentage, right? Let us say we will, whenever we look for it, since we know that it's a probability game, when we look into probability, let us say 50-50 is the one probability we can have it, right? That means here 50% of the time I may be losing, 50% of the days I will be winning, right? So now another one, I want to I will be so I'm just going to change the formula here, right? Winning, I am talking about 50%. So that means a balance 50%, right? 50-50. Now I want to see reduce my winning percentage to 45, right? Now winning percentage 40 with 35 and 25, 20, 15, 10, and 5, right? So when we start the calculation, you will understand why I want to show you all these, right? See, I just want to show you how much risk it can have maximum, right? And as you know that we have how many trading days? We have 20 trading days. So as per the above this one, we will be doing maximum 60 trades per month, right? That means 60 trades into 50%, right? 30 trades we will be actually. So here I'm just applying here. So 30 trades I will be losing, 30 trades I will be winning. Here 30, when it comes to 45% winning, 27 trades I will be winning, and 33 trades I will be losing, right? The same, it's just a number of trades, right? And I'm just putting the basic calculation, that's it, right? And every winning and losing trade, we know that these are the money which we are going to make or lose, right? So here the P&L will be something. If I'm losing each trade, I will be losing 810 rupees, and when I'm gaining, I will be gaining around 2,190 rupees. That means when I'm making loss in 30 trades, I will be losing 24,300 rupees. When I am gaining, I will be gaining 65,700, right? So that means net, I will be making around 41,400. If I can work with the 50-50 probability, right? Now I'm just copying this. There is nothing magical things, just copy and paste, right? I'm just going to do a basic, right? That's it, right? Now let us see. I'm talking about net P&L here because these are post our brokerage and statutory cost, right? I hope you are able to follow my calculation, right? Yeah. Now let us see the capital also. Capital we told 50,000, right? See, you don't need exactly 50,000 to execute a nifty option buying, but keep 50,000 as a basic minimum capital so that you can actually have extra buffer money to protect your position or trading strategies, right? That means we will be making a return of simple, right? Now we are done with the calculation, right? So friends, always understand that these are just for an educational purpose. So don't get actually tempted or I mean jump into the strategies immediately seeing this. See, there can be slippages, there can be other things which we need to take in care. But this is a basic calculation. I have considered most of the parameters I have taken, right? Now, with the 50-50 probability, we understood that we may be gaining around 82% of return in a month, right? But we know that most the option buyer has only 33% winning probability, right? So let us take these two in consideration, right? These two in consideration. Now, so here, let us say, okay, the color doesn't look good, so we will change the color. Yeah. Now, this is a high probability winning strategy, right? Like as per the analysis, we know that 30 to, okay, this also we will mark it. Right? 30 to 33% is the winning probability what a option buyer has. Right? That means if we are winning by around 35%, we will be able to make around 14,400 after all cost as a return, which is around 28% return, right? Which is a very big high return, right? So 35% winning itself will give us a big return in a month. Even with a 30%, we will be able to generate around 5,400, which is again a 10% kind of return, right? If we lose by 25%, as you can see that after all costs, it comes hardly a loss of 3,600, which is a 7% on our capital, right? So what we need to understand, these three, why I marked with a color, this is a high probability area. According to me, these are high probability area, right? Now, forget about this part, even if it looks very, very attractive, but let us come to the risk part mainly. See, if the system is able to generate only 20% winning trades, then you will be ending with around 12,600 loss, right? Here, when we take a strategy, what we need to understand is, even if a 1 week consistently, if it making losses, right? If 1 week consistently market is in a sideways, okay, we may be consistently losing that, right? So always understand that maybe we are looking for this 30% probability. So then we should have a patience to accept up to the consistent, let us say consistently, if 70% if losing, right? 42 trades if it losing, we will be ending with a loss of 34,000 rupees. So we should have that mindset that, okay, even if it comes to that kind of level, we will be able to, run the strategy, right? That's what I always say, that keep a 50,000 plus or 1 lakh rupees or whatever in your account as a buffer to protect your strategies, right? So friends, this is how the beauty of the strategy. Here, what we are doing here is, the main important part here, what we did is 1:2 risk to reward ratio, what we did it, right? That's a beauty of the strategy, right? 1:2, 3 risk reward ratio. So every 1 rupee risk, we are going to get a 3 rupee reward, right? So that's a key, or that's a key funda of this strategy, right? And analysis part, the system will take care using different parameters. So each strategy has a different parameters, right? So friends, what I want to say is, if you are someone who is looking to start this strategy, it's a completely automated strategy, right? It's an algo strategy. So all analysis part will be taken care by system, all money management things will be taken care by system, all execution part will be taken care by system. So if you are willing to invest in this strategy, I want you to have this psychology. One, always understand that it is a probability game, and this is a low probability game with a higher edge what we are playing, right? Then always understand that whenever we have consecutively losses happening, we should have enough buffer within our account to protect the strategies and meet the M2M risk. And see, sometimes we may be seeing consistent losses. Like 1 week, most of the people will lose the confidence when they see a consistent 3 or 4 days losing trades, and they don't see any profit in a week. They actually start worrying, and they may actually stop the strategies, right? That should not happen. So understand that any strategy, if you continue with a discipline, it can actually work for a long term, right? So you should have enough capital to meet your M2M risk and hold the strategy, right? These kind of psychological awareness you should have, then only you should invest in this strategy, right? Otherwise, you may get panic in between. So that I want to make sure that you have the right psychology within you, right? If you are ready to have this kind of awareness, then I want to show you what are the strategies which we are offering in option buying. One we call as a trend maximizer. Trend maximizer is a crude oil option buying strategies. Using again technical indicators, system identify the trend of crude oil, and it actually keep a 1:3 risk reward ratio and actually trade in the market, right? So this is called trend maximizer. All strategies, normally we say that we keep it minimum 50,000 rupees capital, even though all the capital will not be deployed, because you know what is the kind of premium required for crude oil or Nifty, Bank Nifty, Fin Nifty, and what. So according to the capital requirement, the system will deploy the capital, right? Then we have Pathfinder and Momentum Master. Pathfinder, we do it in Nifty option, and Momentum Master is we do it in Bank Nifty, right? So these two strategies, analysis part is similar, right? So backend, whatever analysis the system is doing is similar, right? That's why we kept almost similar pictures and everything, because there is no difference. Only thing, the instrument is different, and the risk to reward ratio is correct, but the points are different, right? That's the only difference in this. We do it in Nifty and Bank Nifty. And again, it's the trend will be identified by using technical indicators. Then or the risk to reward ratio is 1:3. And only thing, the points of the stop loss and target will be different, and the lot size are different, right? Then comes to FinEdge. FinEdge is another very interesting strategy, which we do it in FinNifty. Again, using technical indicators, the system will identify the trend and buy at the money option, right? So here again, the 1:3 risk to reward ratio we maintain, and the stop loss and the target points are different, and analysis part is different compared to Nifty and Bank, right? So these are the 4 strategies which we are offering to our customers, and it's a completely automated trades. And whichever, I mean, we have already tied up with 15 brokers. So whichever brokers account you have, you can actually integrate with the Algorithmic platform, and we can actually execute these trades, right? So that's all in this video, friends. Thank you very much for watching. For more details, you can visit my website, algova.com, or you can contact us, and either me or my team members or anyone will help from our company, right? So that's all in this video, friends. Thank you very much